Hello everyone and welcome to the Chart Explain. This channel is all about breaking down stock market concept in the simplest possible way. Whether you are a beginner or just curious, you will always learn something new here. Let's dive into today's lesson. That is the very basics of the stock market. We'll know about what is the stock market. What exactly is the stock market? Let's break it down into two parts. That is stock and market. Market is a place where people regularly gather for the purchase and sale of goods. Next word is stock. Stock is a security that represents ownership of a fraction of a company. Stocks also known as shares. That's why stock market is also called as share market. Now we know stock and market. So stock market is basically a place where people buy and sell shares of companies. A share simply means a small piece of ownership in a company. For example, imagine a big pizza. If it is cut into 100 slices and you buy only one slice, now you own 1% of that pizza. In the same way, when you buy a share, you own a small part of the company. So these buying and selling of shares of the companies happens in the stock market. Now, you guys might be having some questions like why do companies issue shares or why the buying and selling of shares happens. So the answer is very simple. The companies need money to grow, to build new factories, to launch new products, hire people and expand their business. So they need money. Instead of taking loans, they can sell some pieces of their company or some shares of their company to the public for the money. People like you and me buy those shares hoping that the company will grow in the near future and our money will also grow with that. So we invest money in these companies. Next question is, after investing money in the stock market or buying shares in the stock market, how investors earn money? How your money grows in the stock market? So the answer is there are two main ways to earn money from the stock market. One is when the price increases and second one is dividends. Talking about price increases, for example, you buy a share at 100 rupees and after some days the price of that share it increases to 150 rupees and you sell that share at 150 rupees, so you make a profit of 50 rupees. This is a type of earning from the stock market when the share price increases from which you bought. Second one, dividends. Some companies share a part of their profit with shareholders. That payout is called as dividend. Means the companies made profit quarter to quarter or year to year. So from those profit, company will share some part of the profit with their shareholders. That is called as dividends. Next section is why the share prices move. Before that, I am asking you that have you ever observed the prices of vegetables are costly in some days and very cheap in some other days. Why those prices move or why those prices change? All the prices change every second or every day because of demand and supply. If more people want to buy a stock or a good or some vegetable, the prices goes up because the supply is constant but demand increases, so prices increases. If more people want to sell, price goes down because the supply increases but demand is same, so price decreases. So this is the logic behind the movement of the price. Everything depends upon supply and demand, but those supply and demand depends upon a lot of factors like news, profits of the companies, global events, government policies and even market sentiment affects the supply and demand of a share. So because of supply and demand the prices move. So the final question is the stock market risky? Yes, it has risk. In particular, I would say It has some calculated risk, but mainly when we don't understand what is the market and what we are doing in the market. So for safe and smart investing, do investment in good companies like Tata, Reliance for longer period of time. Long term means not for 1 year, 2 year. Do investment for 5 years, 10 years, 20 years, so that your money will be multiplied. Don't do short term investing, and specifically without knowledge about the stock market, don't do short term investment. It will lead to loss. Ultimately it will lead to loss. Now the final section of the video, what we have learned in this video. Let's do a final quick summary. So the stock market is basically a place to buy and sell ownership of companies, a way for companies to raise money by selling their shares, a way for investors to grow wealth, a system that works on demand and supply, specifically demand and supply. That's it for today. Thanks guys for watching Chat Explain. If you learned something new, make sure to like, subscribe the video and share it with someone who wants to learn about the stock market better. Bye bye. See you in the next video.